And let's get right to today's market action. We've got Pete Lang, Lane Capital president, who thinks this is a stock picker's market with a focus on value versus growth stocks. Dan Genter, RNC Genter Capital Management CEO, expecting to see another 3 to 4% rise in the markets by the end of the year. Nicole Padalady is on the floor of the New York Stock Exchange. You know, we just can't get enough of Nicole Padalady. And we've got Chris Gersh. He's joining us from the pits of the CME. Chris, do want to start with you today and kind of what you're looking at in the markets and how you're feeling about we had a crazy week, especially for the S&P.
We did have a crazy week, and just when you thought it was over, all of a sudden you have an afternoon like this. Big news is LeBron's second biggest thing right now on the floor is that oil trade. The fact we're trading below 101 was a huge move as we close into this session, and a lot of traders, they long that gold vol about 2 weeks ago, and they shorted crude. A lot of these traders, it was at 107. Everyone was calling for a 110 handle. We're at a 100 handle, just as we talked about 2 weeks ago.
So let me ask you, Pete, are you concerned? I mean, people keep talking about the need for correction. We just had a guest on the network who was saying there's a major correction coming. You've actually pointed to the Shiller PE and that it's approaching a level that makes you nervous. Why is that?
Well, absolutely. If you take a look at what kind of gains we have in the market, the Dow's only up 2% on the year, and the S&P is up about 6%. So we're basically in a stock picker's market. But what overshadows all this is the risk of really the Fed's policy. They've overheated this market. So if you look at the price-earnings ratio on the S&P, it's up to 19, historical averages of 15. But remember, those 19s are in good, solid markets. And as you mentioned, the Shiller ratio up to 26. These are all problems that we've got to deal with. So a lot of risk in the markets. And it comes down to really picking the right sectors and quite possibly moving towards safer positions in the future.
Okay, I want to go to Nicole really quick, because Nicole, you and I were talking just a few moments ago about the fact that earnings season is now underway. Looking at the calendar for next week, we have got some major names coming out for earnings, and this really could be a game changer for traders.
Absolutely, and all of these names, each one is so important to give us an idea of how things are doing going forward, the guidance they may be providing, if they're snapping winning streaks. We know so many of these companies over the last 5 years have just gotten tighter, tougher, cost-cutting, laying off jobs, and so over the years. But now the question is going forward. So we'll certainly be looking to the banks. This week was a pretty interesting week on Wall Street. There's certainly this feeling that, and we've had this feeling for some time, that the market is overbought. You feel that nervousness, but no one really is out shorting the market. They're not comfortable to bet to the downside. So the path of least resistance still seems to be the upside, despite the fact that you sometimes get in economic news that's not great, right? Like GDP numbers, yet we still manage to move higher at certain points. Portugal worries, things like that.
Well, Dan, let me ask you this. We just heard from Pete and people who might be nervous about some of the levels the market is reaching. You're worried that if they were to sell now, they might miss an additional, 3 to 4% gain.
Well, I don't necessarily disagree with what Pete is saying. I think there's certainly risk in this marketplace, and where no one expected this market to be up 6-7% on the heels of a 32% last year. So having certainly a 3 to 5% correction is probably in the cards. We're flirting with it now. And I think, again, if we see some pickup in inflation and the Fed starts to move a little earlier, certainly we're going to see 10%. But I think independent of that, we're in a position to where the earnings are going to come in relatively good. We saw 6.1% in the first quarter. I think we'll probably see some positive surprises because people were negative and they were very conservative in the second quarter. So I expect we'll see 8% increases in earnings in this quarter and probably 9% for the year. So I think that we're in a position on future earnings versus trailing at about a 16.6 PE that I would agree the expansion of PE capability is very, very limited. But the ability to maintain these PEs and track roughly an 8% earnings trend plus a 2% dividend, that's going to be very important, I think will still put us where we have 10% potential for the year. And so that is up another roughly 4% from where we are now.
Okay.
And especially if people are getting good cash flow while they wait, I think it's, they're still going to have strong returns.
Well,